Hello, my name is Timothy Lee Rogers Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In Phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, Phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tool that you need to make intelligent investing decisions, manage your money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here.
Good evening, everybody. Hope everybody doing well this evening. Still trying to figure out why I couldn't hear the stream starting soon. I couldn't hear that in my headphones. But luckily, everything else is working inside my headphones, man. Now, y'all give it up for yourself for tuning in today, man. Give it up for yourself for tuning in, man. You feel me? Hey, man, shout out to everybody that's pulling up. And if this is your first time tuning in to Tim's Tidbits, please allow me, with everything inside of me, as humble as I possibly can, say thank you and say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome and give you a nice hearty, well, thank you for tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Aranya Grande. That just means big spot of you hablo español. And you're in tune to another episode of ZYWWMIBQ Intraday Price Action Recap. Yeah, man. Hey, man, what's going on, man? How y'all doing today, man? How y'all doing again, man? Let me look out there and see how y'all doing. Hey, what's going on, man? Y'all look good today, man. I salute you with both hands. Who we got up in here today, man? Y'all drop something in the chat so I can see y'all. Not in the Zoom. You ain't got to drop nothing in the chat in the Zoom. I can see y'all. But if you're on YouTube, drop something in the chat, man, so I can see who tuning in, right? We got Rhonda Green pulling up in here with the new thumbnail photo. Every time I see that new thumbnail photo from Rhonda Green, I'm thinking it's like a new person, cause every now and then Rhonda try to change up her picture, and I'm thinking, oh, we got somebody new, but it just be Rhonda that changed her picture. You know what I'm saying? We got Rhonda up in here. We got Steve up in here. We got Deborah. Oh, we got working Deborah today. It's the RN Deborah. So she might be good today. We ain't got light skinned Deborah in the chat. We got Yolanda up in here. What's going on? That's all I see in the gang kind of thin today. Yes, everybody, they used to me taking the day off or something, or pulling up late. I don't know, man. Hey, life be life, man. I just woke up. I actually set an alarm today to wake me up because I said, you know what? I'm not going to be missing the live stream, I'm not gonna be, you know what I'm saying? I ain't gonna be out here pulling the Ian on y'all. I ain't gonna be hitting y'all with the Ian Dunlap. Back when I was tapped into Ian in the, what he called it, the panda, what was it? It was some kind of panda.
The Red Panda Stock Club for
Oh
50,000. You too can be rich.
Yeah, Red Panda. I ain't paying no 50,000. It's like he had like a little Red Panda thing. He was doing like it was like a free one where he was like trying to talk you into paying that 50,000. He used to like dangle that in front of you to see how. Oh, we making this amount of money. I ain't paying you nothing, buddy. But man, he was Cancer McGee, man. He was Cancer McGee. He always canceling, always. He was Cancer McGee, and I was like, man, I gotta tighten up. I've been having a lot going on. I've been having to cancel, had doing stuff. You know, I know life start lifing, but when you start feeling like Cancer McGee, oh man. Anyway, no shot at nobody. Ain't taking no shots at Ian and nobody else. You know what I'm saying? Even though he was the reason why I stopped watching EYL. You know what I'm saying? I ain't like his attitude. You know what I'm saying? I think when he started getting a little bit of money, his attitude changed. He started, you know, so he got the big head and he used to start talking real grimy to the chat. You know what I'm saying? When he first started coming on EYL, you know what I'm saying, he was just like the nicest guy you want to know. But then I think when he started grabbing a little bit of money off of people, you know what I'm saying, and then he got EYL put him in that little clique of people that they was taking on the Breakfast Club and stuff like that. Oh boy, he switched up. He started talking real greasy to the chat. I say, look here, man, I'm supporting you. I ain't got to sit here and take this. And I stopped watching EYL after that. I ain't got to be taking this, man. I'm quick to be up out of there. Shout out Joe. What's up, man? Shout out Calio over there in YouTube land, man. Calio, what you doing over there in YouTube, man? Why you ain't over there in the chat, man? Shout out Shatter. Hey, the screen just changed. Now, when it be pictures that I like, they change the picture so fast. Like it was like a picture of a rhino on my desktop. And I was like, oh man, that's cool. I like that picture right there. And it just popped up there like last night. And now it done changed. Yes, money don't change people. It just exposes who you really are. Yeah. That means he was always a Richard. All right. He was always a Richard. For those who don't know what a Richard is, I just put it like that for the sake of the ladies in here. You know what I'm saying? We try not to have locker room talk in front of the ladies out of respect, but you know what I'm saying? Just think of most white people who named Richard. What's their nickname? What do they call them? Y'all know a famous one. His last name Van Dyke. I think I was grown before I realized his real name was Richard. His last name Van Dyke. So that's why I say he's always been a Richard. He just got a little bit of money and he got comfortable. You know what I'm saying? That's what happened. Like when you a Richard and you get a little money and you start, you know what I'm saying, you start like getting chicks and getting a little recognition. Oh man. Can't tell them nothing, man. Like me and my brother be talking to my homeboy. I got a real good friend named Troy. He like a little brother to me, man. We be like, man, the stuff you did, man. We did that when we were like teenagers, man. We did that when we was teenagers, man. You know what I'm saying? You grown, man. You almost 50, man. Ain't nothing like excited about chasing females and going out and hanging out. And man, we did that stuff when we was teenagers, man. Now, if you ain't never do it, you ain't experienced that part of it. Now, when you get in your late 40s, now you trying to experience that. You know what I'm saying? But you ain't nobody tell you to go get locked down and married when you was, you know what I'm saying, that young. And you get a chance to live and do all that young man stuff. But when You ain't used to stuff, man. Like Juvenile say, you start acting like a who ain't never had. Shout out here to Learn to Share over there inside the YouTube land, man. Shout out Kim. What's up, everybody, man? Y'all ain't tuning in to hear me talk about foolishness, man. Y'all tuned, yeah, man. Y'all pulled up to talk about the NQ Price Hack Show recap. Yeah, man. Let's go ahead and get into it, man. Oh man, I ain't even got my trading view open. Hey man, did Price do anything to catch anybody off guard today? I was in here trading a little bit this morning. You know what I'm saying? I was in here trading a little bit this morning. And after that, I went to the gym. And after I went to the gym, I went by Walmart. And after I came from Walmart, I came back home and took me a nappity nap. Man, look, when you understand order flow and price delivery, and you realize that time is king, when you put stuff on a chart and go back and look at it later, like this right here, it will look like you got a magical paintbrush or magical tools, because the algorithm will draw towards and react off of these things that you draw on the chart like you are magic. Do you believe in magic? In the tools that you have? When you put them on the charts, do the chart just crash or draw toward the stuff you want it to? Thank you very much. Thank you very much. Thank you very much, man. I kill me. Hey, man. Did the market do anything? Huh? Where's my clip? All right. As we jump up here to the daily chart, did the market do anything today that caught you off guard? Did the market do anything today that caught you off guard? Huh? Oh, man. You see what I'm saying? Look at this right here. This right here, this red line right here, right? That red line, what happened when we got to that red line, right? We got to that red line today, and let me blow it up real big so you can see, right? Friday, we dropped down and we kissed that red line, right? We came down Friday, kissed it, bounced up off it, right? Then with today's trading, we opened up, had a slight gap up, traded down below that red line, and traded down below Friday's low, right? So we took out Friday's low, right? A little bit of a deeper dive into that liquidity pool. Let's see how far we went into that liquidity pool, right? Come there. Dropped 63 points down into the liquidity pool. Dip, baby. Come on, dip, baby. Right? So we dropped 63 points down into the liquidity pool. And then,
Hey, Kim,
yeah.
before you really get into your thing, will you, whenever you get a chance to tag it on the end, if you like, will you go over again how you can, I can't remember that, so to speak, rule where you can kind of predict how fast how far it can go, it will go past liquidity? It's not absolute, but I remember we discussed that a long time ago.
PD arrays, like
no, I know you hit the PD array, but you can sometime I thought say how far you will go past that PD array. Like you said, how we dipped 63 points. Mm-hmm. Isn't that something that ICT's discussed before?
Now, if you talk about like projections as far as where it's coming from, is that what you're talking about? like where it's
I
come.
guess if that's from the initial projection, then that's okay. I understand that. I thought it was something else that you used that you could say how far past liquidity it would kind of run. But if it's just based off that
Oh
projection,
yeah.
then never mind. I understand
Oh
that.
yeah, yeah, yeah. It's just like as far as I know, like there's never been nothing that I ever taught saying, oh, you can expect to go this far past the liquidity outside of if there's a PD array over here that price can draw into, or a projection from when you came from your manipulation leg and just projecting down. Those are the only ways I know to get a specific target for, okay, this is how far past I can anticipate it to go. All right. I don't know what I was about to say, but we dipped below inside the liquidity pool, right? And then, oh, that's what I was saying. And then look at the reaction off of this magical, mystical red line that I put on. Matter of fact, the red line just floating in the middle of nowhere, right? It's just floating in the middle of nowhere, right? But look at the, man, look at the reaction off of this magical red line right there. It says PML, which stands for prior month low, right? And it's there's a little annotation there that says from the continuous contract. Because if we go up here to our monthly low, right there, our monthly chart, I mean, you can see that this red line is just floating in the middle of nowhere, right? Just floating in the middle of nowhere. Okay. But if you switch over to your continuous contract, the NQ, one exclamation point on trading view, all right, if you switch over there, then you will see that that low that we went below today, that is the low of September based off of the continuous contract with B adjust off. When you turn B adjust on, as you see, that September low is all the way up there. Just like if we come over here to our front month, right? Go to our NQM 2026. That's our front month, right? And look at our monthly chart. There is that September candle, right? It's way up here, right? It's way up here. There's not even a wick on there on the front month, but it's way up there. And why is that? That's because, right, when you're looking at the front month is based off of everything being priced in accordance with the inflation, as I like to call it, for the front month already baked in to the candles, right? So what does that mean? On your continuous contract, if you turn B adjust on, right, every time there's a contract rollover where these little arrows are, see that there? You went from the September contract to the December contract, went from the December to the March, went from the March to the June, went from the June to the September, went from the September to the December, from the December to the March, right? And then again from the March to the June. That's what we are now. But each time that contract rolled over, right, the prices went up. The value of the NQ futures went up. So on Friday, right, it may have closed being worth, matter of fact, let's go and look at it, right? So if we come here, let's find the rollover. This is the rollover here, right? This is the rollover right there. So let's look at we're going to look at the month beforehand, right? So we're going to put a close line Hold on, let me hide all this other stuff. And for those who already know this stuff, yeah, and you're looking like, Tim, we already know this stuff. Who cares? Shut up. Everybody don't know it. All right? All right. Tim, you're so mean. I know. I'm sorry. Boo. All right? So, we're going to, let me find a line that'll show up on here. Let's go with our box top month. That'll show up on here. All right? So, this is our rollover date there during this month. So we're going to put a line right there on that close of that month right there. Okay. And then we're going to turn the B adjust on. Do you see how when we were in, this ain't just from this one contract changeover. It's baking in this closure date from here all the way up to up here. Right. That has baked in, right? So it's baked in from this here. It's baked in 1, 2, 3 rollovers. It has rolled over. It has rolled over 3 times since the closure back in August 2025, right? But in August 2025, when the month of August closed, it closed in the NQ futures had a value of 23,455 and a half. On that date, it closed with a value of 23,455 and a half. But since the inflation has been baked into the candles over here based off of all of the rollovers, right? Now, when you look at with the B adjust on, it's saying that because of the adjustment of the inflation, as I like to call it, it's saying that back in August, right, the adjusted inflation amount is that it was worth $24,160.75, right? So with the B adjust on, you're getting these inflation adjusted prices for all of the highs, all of the lows, all of the opens, all of the closes, all of the fair value gaps, all of the breakers, all of everything. You're getting the inflation adjusted versions of them. But if you turn B adjust off, you're getting what IPTA knows that it did. You're getting the actual prices of what it did back then, right? And if you notice, when you look at, right, this is the contract that we're in right here, the June contract, right? Let's put a line right here on that date at the June contract. And let's go down to a daily chart so we can really see it good. And we're going to come over here to the contract date, right? This is the contract date there, right? And we're going to move over to there like that, right? And then notice something about all of these candles right here, right? Matter of fact, I'm just going to circle around them like that right there, all right? And I turn my B adjust on and off. You notice how they're not moving? They're not moving at all. Every other candle on here is jumping up and down, moving around. They're jumping and they're moving around, right? Because notice, remember when we had this change in price between 23,454 and a half and coming up here to this 24,167, whatever, close enough for government work, right? That ain't exact, but it's close enough. And y'all know me, I got to get it perfect, right? So we're looking at 23,454 and a half, right? And then we're looking at 23,160.75, right? So Now, see, that's saying that from one day to the next, it changed $706.25. It didn't, right? It's just been adjusted over what we said, 3 rollovers. It was 3 rollovers. Now, looking at just going from one rollover to the next, right? Right, with B adjust off, when price closed, when price closed on this day right here, right? Let's make him orange so we can keep with the style that we've been using, right? And we're gonna make them dash this time so we know the difference in them, right? So we make him orange, as they say in the South, right? I was raised in the South. And then we're gonna turn B adjust on, right? And now we're gonna put it there at the close, and we're gonna make him azul, right? We make it blue, right? So now, as we see, right, when it adjusted, right, now it's saying that it jumped up, right, when it closed on the date that what is this, June? So what was that? What contract was that? March contract. So when the March contract closed, right, Monday, 3/16, the value was 24,654 3/4, right? But now when we're looking at the value based off the front month, right? You turn B adjust on, it's saying that it was worth 24,872 1/4. And that's not what it was worth. But based off the inflation that comes with the new contract rollover, that's where you get in that difference in price. But guess what IPTA remembers? IPTA remembers that it closed that day at 24,654 3/4. So that's why you see IPTA reacting at these levels that seem to just be floating in the middle of nowhere, right? It's not floating in the middle of nowhere. It's reacting to what it know it did. IPTA cares nothing about our closures. It cares nothing about our, the market is closed. It don't care. The contract rolled over. It don't care. We're inflating the price of it now. It was worth this yesterday, but now it's worth. It doesn't care. IPTA just knows the last time when I did this, this is the price that I calculated in my IPTA brain, right? Man, y'all do me a favor, hit a like for the algorithm and subscribe to the channel if you ain't subscribed. Man,
let him cook.
That boy's cooking today already. That boy is cooking today already. I should have had on my tenderism shirt. Hear me. I kill me. All right, man. Let's go ahead. Let's go ahead and get into it, man. Let me take all this stuff off of there. Can I undo all this that I did? Can I undo all this? Let's see if it let me undo that much. It's letting me undo a lot. It let me do it. It let me undo all of it. I'm actually surprised. I'm actually surprised it let me undo all of that. It let me undo like crazy. All right. Let's go ahead and go to the NQ. We're gonna jump over here to the front month, to the June contract. Right. You don't have to look at the front month if you don't want to. You can just stay on the continuous contract with the B adjust off and watch it if you want to. You know, I just out of habit, I just, you know what I'm saying, I'm used to watching the front month. A long time ago, I used to always watch the continuous contract, right? But somebody had told me I needed to turn B adjust on because my candles were looking different than theirs, and that used to kind of throw me off from what Michael was showing, but it always showed right on the front month. And so I switched over to start looking at the front month, and now, you know what I'm saying, based off of the recent revelation that I had, right? Shout out Yolanda for pointing. I say, hey man, his B adjust is always off. And then I was like, you know what? That's why, right? And I had a aha moment. You hear me? Okay. So let's jump into it, man. We talked about how price traded down below the liquidity, right? That monthly low that seems to be just floating in the middle of nowhere, right? For the uneducated or the unlearned, right? They don't understand why price bounced off that level right there, right? But we just discussed that. Nice discount sensitivity to that level. A Bitcoin. See how far we shot up there, right? We traded all the way up, right? Creating an inversion fair value gap and trading right up inside this SIBI right here. Is there a gap? Let's see if there's a volume imbalance there. No volume imbalance. So we traded right up and kissed this SIBI. We kissed it today. Let's see how close we came. Did the lips actually touch, or if we teased? Yep, we teasing. We teasing. I don't know if y'all can see that right there. I'm trying to make it as big as possible, but look at here. We teasing. We came very close to that high right there. Right then, take it. Tim, why did you mark that out as buy-side liquidity if it's just a daily high? Because daily highs and daily lows is buy-side liquidity on some time frame. Right? I'm a intraday day trader, so when I see daily highs and daily lows, I automatically know that that's a liquidity pool somewhere. And I just didn't like do it from this interval down. And actually that's driving me crazy right now, because you can see this dotted line right here that's just floating in the middle of nowhere. You probably can't see it because the screen be acting so gooforama sometime. Let's thicken it up a little bit so you can see what I'm talking about. That line right there, that shouldn't be shown on my daily chart. It's driving me crazy right now. This line right here, right, that shouldn't be showing on my daily chart. It's driving me crazy right now, right? Because I like for my liquidity pools to only show on the time frame or lower where it's an actual swing high or swing low. Now, the only liquidity pools that I don't mind showing are the ones that's marked as a weekly high or a daily high, showing on that level, because I know, okay, but if I got it marked as buy side liquidity, right, I want it to be resting at a swing high so it makes sense in my mind, right? So I'm going to drop down here now and make sure that this only shows on those levels, because that's driving me crazy. And then we're going to get into it. Okay, this is a 60-minute time frame. I can see it showing there, so I'll leave it on that level too, right? So here we go. Now you can see there's a swing high there, so I just want to show on this time frame and lower. Right, there's a swing high there, right? So I just want to show on this time frame and lower. So when I go up in time, right, I could have left this one here on the 4 hour, right? Matter of fact, I'll go back and I'll change that, right? 1, 2, right? Right, so I'll just do this one. I'll just do this one, this interval and lower. Then I'll go to the 4 hour and I'll do that one from that interval and lower. See, now you can't see that other one down there. And then when I go up to my daily time frame, I can't see either of them, right? So we've come back up right there into kiss that SIBI right there. Now, since we're in a sell program, right? Since we're in a sell program, And the monthly and the weekly have imbalances that it can draw into. There's a reason for the monthly and the weekly time frame to come down there, right? Since there's a reason to come down there and we're in a sell program, right? You would want this daily SIBI to act as resistance. You would want it to act as resistance. All right. Now, if we come here, right, mark out this daily SIBI right here, you will want that to act as resistance. Now, why do we want this to act as resistance? Because we have created this bearish fair value gap, right, in the premium of our latest expansion, right? When we initially was about to create this fair value gap, we talked about this. We said if we create a SIBI right here, right at this time, okay, leaving this area, this SIBI would be resting in the discount of our move. But since we have expanded so far from leaving this area, this SIBI now resides in the premium of our latest expansion leg. Don't believe me? Let's check it. Let's go here and put this on consequent encroachment and or mean threshold, consequent encroachment / mean threshold. Click it on the high of the weekly high, come to the low of the week, right? And as you can see, when we closed out that week, it was in the premium of the move, okay? It was in the let's put it on 3 so we can really see it, right? It was in the premium of the move, all right? And not only, wait a minute, why is that? There you go. Okay. And so then we opened up Monday and Tuesday and we extended that dealing range, right? From that high to that low. We extended our previous week's dealing range. So now where is that PDA rate? It's resting in the premium. And notice, remember, what did I say about this SIBI from Friday the 27th? I said that we rallied up and created an inversion fair value gap right here, right? What's significant about that? This is the first imbalance that was created after leaving this area right here, right? So after leaving this area, this is the first imbalance that was created after leaving this area. So since that's the first imbalance after leaving this area, right? That's significant. He is important. But guess what? He or she is in the discount of our move. So we don't want to see the algorithm using that as resistance right now. Why? Because we want to see it retrace back to at least equilibrium, which would be right here at 23,862 and a quarter in this case, right? And we want to see it move to the premium PDA rate, which at this case is this bearish fair value gap, the one from the 26th, because it's in the premium of the move, right? This bearish order block right here from the 23rd, because it's in the premium of the move, right? And now, based off the sell program, this bearish order block, this bearish fair value gap, their job is to push price down back below this low and down into these higher time frame PD arrays, if that's what IPTA wants. Oh, if it's only if that's what IPTA wants, right? Now, So that is what you want to be watching for on your daily time frame. These are daily PD arrays up here. So you want to see, right, on a daily basis, price respect consequent encroachment of this SIBI, meaning on a closing basis, you don't want to see price closing above consequent encroachment of this fair value gap from the 26. You don't want to see price closing above mean threshold of this bearish breaker right here. So if you get you a Fibonacci tool, go from the, bearish order block, get you a Fibonacci tool, go from the high of the order block to the low of the order block. You see mean threshold is right up there at the high of the fair value gap. So on daily closing basis, you don't want to see these PD arrays being disrespected. Why? Because based off of our latest expansion leg, these are the only PD arrays up there that's designed to send price back down, right? If these start to fail, right? If these start to fail, then this bearishness is starting to run out of steam. Because once you get below a balanced price range and you're bearish, you don't want to see price pushing back through it. You want to see it be used as resistance, right? And right here, we used it as resistance here, right? We got below it, traded back up into it, and displaced away, right? So we're using it as resistance there. So now, since we used it as resistance, now this is the dealing range that we're trading in, and we've come back to a premium, and you want it to continue down, right? So that's what you're looking for on your daily time frame. These are your premium PD arrays that you're looking to be respected to take price back down based off of the sale program. If we start to lose these, right, this is your first imbalance that was created as price displaced down, right? So this was your first based off of leaving this area, right? It has become an inversion fair value gap, right? The sale program stays intact. You would look for this SIBI to push you down, and then you would look for this to become a reclaimed SIBI to take you down, right? Because this is the first after, when we took off, but this is the first when you left this area. But if we lose this and create an inversion, and we come up here and we take out this high, now you're looking for this first on this displacement down to become an inversion to use as support to take you up and push back through this balanced price range to mount up a rally to continue higher, right? You don't want to see this become an inversion fair value gap. You don't want to see it take out this high unless that's what IPTA wants. If IPTA wants more downside, we've established our structure, we've left our structure, and then we've started to displace away from our structure. Since we've engaged with liquidity, there's always a possibility for a reversal, but since the higher time frame has reason to come down here, we now have the PD arrays that we need to watch to see if IPTA still wants this, and we now understand use this as resistance, use this as a reclaim and continue down, or lose this and use this as support as an inversion fair value gap to mount up and take off to the upside. Jesus Christ.
Let him cook! I said let him cook!
Y'all do me a favor, man. Hit a like for the algorithm and subscribe to the channel if you ain't subscribed, man. Do we got any questions before we drop down into the intraday time frame? Do anybody got anything before we drop down into the intraday time frame? Nothing? No, nothing? Okay. Okay. All right. Let's go ahead and drop down into our 60-minute intraday time frame. All right. And as you can see, like I told y'all earlier, I was in here trading today. Right. I was doing a little bit of trading today, and the stuff that I was watching is still on my charts. Right. You know, on the 60-minute time frame, the only thing you can see is some internal buy side liquidity here. Right. Why I was watching that, because that was some relative equal highs based off of where we start. Because this is where price started at today. Right. This is where we opened up today. Okay. And then by the time we came into 9:30, which would have been like over here inside this green candle right here sometime, right? These were the relative equal highs, and this was the buy side liquidity above that. So you had relative equal highs here. And if you notice, right, there's a swing high here, there's a swing high there, and the next swing high you get to is right there. So that's why those are the liquidity pools that I had marked out based off the 60-minute time frame, because I'm an intraday trader, and if you're starting at a daily time frame, what's 2 time frames down from the daily, right? You got a daily, you have a 4-hour, and then you have a 1 hour. 2 time frames down. 60-minute, right? So I'm marking out the liquidity pool. Why? Y'all already know I like them 2 time frames apart. That's how stuff just falls together just magically with IPTA, right? So that's why I'm looking at those 2 liquidity pools, right? Those are the liquidity pools based off where we were trading around when I start doing my chart prep this morning at, like, you know, 9 o'clock, about 9:05, somewhere around there. This candle here, we was trading like right around here somewhere, right? Relative equal highs, and then buy side to the upside up there, right? Tim, why wasn't you looking down? Because price was in a strong buy program by the time I started looking at the chart over here, right? We were in a strong buy program. Price hadn't rallied all the way up above the new week opening gap and was already using the new week opening gap as support all night long, all night. It was using the new week opening gap as support all night long, right? And then so when I come in here, I'm like, oh, this is a very strong buy program, right? We've already swept the previous day's low. We're in a buy program, and we're using a weekly PD array, the new week opening gap, as support, right? Totally defending the lower half, not even getting in the lower half. So I'm not trying to buck the system. I'm looking for targets to the upside, right? Looking for targets to the upside. Well, Tim, why did you mark out that fair value gap right there? Well, let's go look and see. This right here is the first SIBI that was created. That's the first SIBI there that was created in this drop down right there. So what am I always looking for? I'm looking for the first. I'm looking for the first all the time, baby. I'm always looking for that first. All right? Why? That first is important. Hear me. So I'm always looking for that first. I don't care where I'm looking at in price. I'm always looking at that first to see how is price drawing into it. Is it invalidating what I think? Is it supporting what I think? All right. So that's why I had that SIBI from 4 a.m. on Friday right there marked out. And when I see a first that's created during a time that's on my time is king chart. Well, Tim, what is your time is king chart? I'm glad you asked that question, little Timmy Rogers. Let me go over here and open up my used a lot folder and pull up my time is king graphic. When I see a PD array and it's a first and it's created inside any of these important times right here, a session, a kill zone, a macro window, a opening range, if it's created during any of these important times, I really pay attention to it. And so that right there was created on the 4 a.m. candle. That is during the London kill zone. So that right there, I'm really paying attention to it. All right. It's a first. It's during a time when the algorithm is going to understand that it's important. Okay. And then we're coming back over here, right, inside the New York lunch/afternoon kill zone, and we're interacting with it, right? So during the lunch kill zone, we rallied into it, and then in the afternoon kill zone, as you see, price is reacting to it, right? Price is reacting to it. Right, we traded all the way through it, offered buy side and sell side delivery all the way through it. Right, the next candle we traded through and closed above consequent encroachment. The next candle we came down and used consequent encroachment as support to run up there and kiss the buy side liquidity pool that we were outlining. I'm not going to say targeting, because I'm not going to sit here and pretend like I was getting in a trade to target that, but that was just liquidity pools that were reasonable for the algorithm to draw toward. Okay, and you can see how it used that first, right? But Tim, why didn't it do anything with that hourly fair value gap right there? Why didn't it do? You know why? Because that one there is the first. And it understands that there's something about you, baby. So it just blew right through that PD array, and then it chose you, and it want to say that it's something about you, baby.
Let him cook! I said let him cook!
I'm asleep. Boy, look here. They gonna ban me. They gonna say, boy, look here. you just giving up too much. You're putting the people on too much. Oh my goodness. Do anybody got any questions before we go down and look at the New York session? We're going to dive in and look at just the new, but do anybody got any questions about anything that we're saying that's just totally foreign to you at this time, right? Totally foreign to you at this time. Y'all do me a favor while I get me a sip of water, right? Y'all hit a like for the algorithm. Subscribe if you ain't subscribed to the channel, and share it. What in the world is that on my bottle right there? Look like there's something on my bottle. Is there something on my... I ain't got my glasses on, y'all. Hold on. I was trying to see if there was something on my bottle. Oh, no. Ain't nothing on that. That's just a little... That's just a little hole. That's just a little hole where the... Oh yeah, something on my bottle right there. I need to clean this top. It's just that's the little hole where there's a little breathing hole, right? And then it's another little hole in front of it. I'm not sure what that other little hole is, but the other little hole looked crazy. I thought it was something on my bottle, but I need to clean this top. Anyway, share this with somebody who you think might get something out of it. And if you ain't subscribed to the channel, you know what to do. Hit subscribe, turn on your notifications so you won't never miss a live stream. And speaking of don't want to miss, I'm about to get hot and heavy on putting together the magical Fibonacci tool, trading secrets that feel illegal to know. I'm about to get hot and heavy on that right there. You know what I'm saying? The show gonna be sponsored by that coming soon. Matter of fact, it's sponsored of that right now. I need to figure out a way to do like pre-sales for stuff, right? I need to figure out a way to do pre-sale. I need to see if WAP will allow me to do like pre-sales for something. Because like right now, I ain't like super motivated about doing it, because right now it's just like work for, matter of fact, let me go full screen and talk to y'all for a second. Right now it's just like work for me, and I ain't got no guarantee that somebody gonna buy it. You know what I'm saying? So I go out there and put all this work into making it, and then like only 5 people buy it. You know what I'm saying? I'll be totally heartbroken. I'll be totally heartbroken. You know what I'm saying? Or I go through, you know what I'm saying, do all this work, and let's just say, just like the Smart Money Manuscript, right? The Smart Money Manuscript, you know what I'm saying? I think maybe, let me see. If I had to guess, I would say probably like 20 people bought it. 20. Yeah, I think like maybe 20 people bought it. I'm talking about actually paid money for it. Right? It took me a long time to do that. It was a lot. I put a lot of work into it. All right? Like 20 people bought it. That was a lot of work. Right? So now, when it comes to the magical Fibonacci tool, right? And people might say, well, Tim, you got to promote it. But then if I promote it, I got to spend money to promote it. So now not only am I putting time into it, but then I'm putting money into it, and I'm not charging like $5,000 for it. See, that's part of that's what y'all don't understand. The reason why these people like Ian and Terry and what's the name? Not Lumi Trades. Some female, they sell Casper. They sell these courses for like $5,000 and $10,000, because when you spend money to promote it, if you just sell one, then that $5,000 course gives you a good ROI. You see what I'm saying? Because you're spending money to promote it. But when you're selling the course for $69, you can't afford to promote it. Because if I promote it, it's going to cost me like a few $1,000s to promote it. So that means now, if it costs me $2,500 to promote it for a couple weeks, right? Now, if I'm selling it for $69, do the math on that. How many do I have to sell before I'm even in the green? You see what I'm saying?
I didn't come off mute to do the math, but why don't you do something where, like, somebody who shares it and people actually say, hey, I saw this shared on Rhonda's social media, I'm gonna sign up, like kind of like a referral thing, and maybe the person who refers the most people get the course for free, out the Spider Gang, or something like that. That way you don't have to pay for a promotion, you let us do it for you.
Well, WAP already has like an affiliate thing that they do automatically on their site. So they already got like an affiliate. It's built into the WAP site. That was already built in. But to do it in the sense of, hey, the person that do the most gets this, that's another manual thing that I would have to track. You see, not saying that I have to actually track it manually, but I still have to stay on top of that to make sure the right person getting they just due. And that's more work. You see what I'm saying? Because if that all of that is a beautiful idea if my sole purpose was to be an educator that sells courses. That's all part of doing business, right? But being that I'm just this lazy retired guy who is just like trying to help people any way I can, it's like anything that's like extra work, oh man, I break out into hives. I break out. If it's extra work, I break out into hives. That's why I do live streams, because I don't have to go back and do no editing. Y'all don't know how difficult it is for me to do these gems from the live stream. These gems from the live streams are painful for me to do because I have to do extra editing, right? But because I love y'all so much and I want to give you the opportunity to be able to go back and look at the small chunks without sitting through the stuff like this, that's why I do that. But it's still, you know, it's just all on me because I don't want to do the extra work. You know what I'm saying? Don't want to do the extra work. You feel me? All right. But when you have like pre-orders, the pre-orders not only let you know that, hey, there is a desire for this course, because what we do as people, we go out and we create something that we think people want and then try to sell it, instead of going out and asking people what they want and then create it. That's what for those who don't know, that's what pre-orders are. Pre-orders, I'm not going to say all the time, but the majority of the time when people be like pre-order now, a lot of times the product don't even be created. In the vast majority of the time, the product don't be finished, right? And then they say, hey, pre-order now. Because the pre-order is letting them know how much of a demand is out there. Is this a good idea? Right? Is this a good idea? That's what the pre-order is for most of the time. Not 100% of the time, but most of the time with people who's doing it the right way. But for the rest of us willy lumps who hear people talking about, hey, go create a course, go write a book, go do this right here, and you can get all these sales. We be, oh, that's a good idea. Then we run out there and we create the book and we do this and we do that. And then we be like, oh man, it's not selling. Right? You end up with a smart money manuscript that's just sitting on the shelf collecting dust. Right? Because, and trust me, I be knowing this stuff. Like even before I created the smart money manuscript, right? I only created the smart money manuscript for the gang. I created that for the gang. Right? That's why the majority of the gang, I had it presented to the gang for absolutely free. And a few people in the gang actually bought it, right? They actually bought it, and I appreciate you. But I created it just for the gang. Why? Because it's pretty much all the stuff that we've ever discussed based off of different workshops that they may have purchased before. Just different things, different stuff that we talk about in the gang, all just in one concise educational type format, right? That's the only reason why I created it, was just for the gang and say, here's a concise meat and potatoes, fat trimmed away version of everything we ever talked about. All right. So it ain't like I'm just talking about stuff that I don't know and I ain't applying. It's just that, you know, everything I do be basically for the gang. Just because it's like I have such a passion for helping people. A lot of times I want it more than they do. Not saying that I want it more than y'all. Don't get your little, you know what I'm saying, boxers or panties in a bunch. Not saying that I want it more than you, but I tend to want something more than the person that I'm helping. I want it for them more than they want it for themselves. You know what I'm saying? And I end up going above and beyond and, you know what I'm saying, doing all of this right here. Right? And that's just me. It's just in me. It's just in me like that. I don't know why, man. You know what I'm saying? I'm trying to build a new Wakanda together. I got T'Challa all inside my computer over there. I'll show y'all seen the T'Challa right over there. I'm trying to build a new Wakanda together, man. Hey, y'all ain't come here to hear me run my mouth, man. Y'all can't hear me talk about the price action. You feel me? Let's drop down. Let me share my screen. And then we're going to drop down into a 15-minute time frame. All right, drop down to a 15-minute time frame. And we'll see. Matter of fact, let's just go. Let's mark out our 9:30 open. And then we'll just drop down to a 1-minute time frame so we can look at what price did during the New York session. And we'll go ahead and call it. Because we've been on here for a minute. And I just been yapping and running my mouth, right? So that's our 9:30 open right there. Right, that's our 9:30 open. As y'all know, or if you don't know, oh, I didn't set my template. I could have swore I did. I could have swore I set my template, but I guess I didn't. Yeah, it keep. What is? Wait a minute. See, I know I just set that template again. Am I tweaking? 9:30 open. Wait a minute. Okay. All right. It says 9:30 open. Okay. Now double click it. It says 9:30 open. Okay. What in the world what just happened? Now, I know I ain't tweaking. Y'all saw that, right? Yeah, it kept disappearing. I don't know. Right. That's our 9:30 open. And as y'all know, this is a range that I was watching right there. So I'll explain that in a minute. But you know, from doing the pre-market analysis with me, going into 9:30, I like to identify my pre-market high and pre-market low. Why do I identify that? Because that is a algorithmic dealing range that IPTA understands. So from 7 a.m. up into 9:30, right, you want to find the lowest point that the algorithm traded to during that time window. Why? Because we always thinking about time is king, right? Right, we always thinking about time is king, and our pre-market starts at 7 a.m. So anything from 7 a.m. up until 9:30, we're looking for the lowest low and highest high created during that time. So our pre-market low is there at 23,264 even. And then this is our 9:30 candle, and our highest point after 7 is right here on this 8:30 candle, right? And that would be our pre-market high. All right, so you mark out, I like to identify the pre-market low and the pre-market high. All right. Tim, why do you do that? Because that gives me an algorithmic dealing range that I can use to identify if the algorithm is reversing, continuing, if you know what I'm saying, is it attacking liquidity and reversing? Is it attacking liquidity and continuing? What is it doing? Okay, so that's our pre-market high. That's our pre-market low. All right, coming into 9:30 right there. I also like to identify liquidity pools from regular trading hours, right? So if we go to regular trading hours, let me put a line. Well, the lines are there so you can see them. All right, we go to regular trading hours, right? As we see coming into 9:30 right here. This high right here is our Monday morning regular trading hour high for the AM, right? You can identify that if those are important liquidity pools. Now, not just because it's Monday morning, it's because price is trading near this liquidity pool, and it's a regular trading hour liquidity pool, right? And if you don't understand what I mean, is that high right there from Monday morning, that's the highest high that the algorithm made during a New York important time frame, a opening range, a macro time, a kill zone, a session, 9:30 a.m., right? That 9:30 a.m. candle, well, it's not a macro time, scratching the macro time, but that 9:30 a.m. candle is in an opening range, it's in a kill zone, it's in a session, right? That high there is the highest high that it made during that time, right? So it's regular trading hour, it's during, very important times, and price is trading in close proximity to it. Well, Tim, why are you not looking at that high right there, that high right there? It's cool to look at that, but this high here at 11 o'clock, that's internal liquidity for this high right there. This is the highest high during this kill zone, right? That's the highest high during this kill zone. This one here, right, that 11:45, right? Just look at both of these right here. This is internal liquidity for that time, and it's already very near our pre-market high. So there's no need to junk up your chart with more internal liquidity that's resting right there at a algorithmic liquidity pool already. And again, this is the highest high. You're looking at the extremes of the range. All right. And then if you come over here, right, this 10:30 swing low right there, that's your pre-market low, right? You don't have to worry about marking it out in this case. Why? Because it's right there near our, I said pre-market, but regular trading hour low for the AM. We don't have to worry about marking it out because we already got a price level right there near the same spot. If you didn't have a price level there already, then you would mark out that regular trading hour low right there so that you can have, right, an idea of your morning low and your morning high from the previous New York AM session, right? But see how that overlaps? No need to junk up your chart with that. You can just keep in your mind that's where the low is for pre-market, right? And then this is our humongous opening range gap right here. Now, looking at, I don't have that marked correctly, and that's going to drive me crazy since I don't. But let's go here and mark it correctly now. Opening range gap, like that. Now that we have all the pieces of the puzzle together, right? We got our opening range gap, right? We got our liquidity pools for the regular trading hours. Remember, our low is down here near our pre-market low, right? Our internal liquidity is here next to our pre-market high, and then the extreme of the regular trading hours previous session is here, right? Now, when we go back to electronic trading hours, right? What does Michael teach when you have a opening range gap? Let's go back to regular trading hours for a second so I can mark this easily. There to there. Now, let's go back. What does Michael teach when you have an opening range gap this big, right? It's almost 300 points up, right? When we gap up very, very, very a big range, right? The probability of a gap fill or a half of gap fill, meaning come back to consequent encroachment, are lowered. When you open up over 200 points, he gave like rough numbers. I can't remember them exact rough numbers, right? I think it was like over 150 points or more. I don't know. Don't quote me on it. Go back through his material and look for it. But when you gap up or down, right, it can be up or down. It don't have to be up. When you gap up or down, right, that far, the probability of getting a gap fill or that 70% chance of coming to at least consequent encroachment of the gap, it lowers drastically. That's the word I'm looking for, drastically, because the algorithm has moved so far, right? So when you have an opening range gap that big, it lowers the probability of retracing back down into it or doing a gap fill. Now, since we know the probability is lowered, right? We know the probability is lowered, and then we open up at 9:30 and we rally up and take out. The first thing we do, we take off, bow, to the upside, right? Hold on, I got to get my picture. Right? Soon as we come out the gate, where's my used a lot? Soon as we come out the gate, we get us a pow straight out the gate. We get us a pow straight out the gate, right? And what do? We go up here and we attack that regular trade in our buy side, and we kiss/attack our previous day's high. Right? Now let's think about this. Let's put it together. Let's get together right now. Let's put it together, right? Before engaging this daily high, we opened up and engaged the daily low, right? So we took out the previous day's low, right? After taking out the previous day's low, right, we get a bullish break in market structure, right? Then we come up here and we use the new week opening gap as support with great defense of the lower half. This is the lower half. This is consequent encroachment. Didn't even come near it with candle wicks. Didn't even come near it. So defending like crazy, right? Showing much strength. Okay. Then we come up, right? Going to 9:30, blast off and take out the high after getting this huge gap up, which reduces the chance of getting a deep retracement or a gap fill, right? And we go up here and attack this liquidity right there. Okay, so now with all of this intact, took out the low of the day, break in market structure, use higher time frame PD array for support, and then as soon as we open, we go up and take out the opposite end of that range, right? So yesterday's trading was a bearish dealing range, right? We made the high first, then we made the low. Bearish dealing range, right? We took out the sell side, and then we traded all the way back up and took out the buy side. What does that mean? That means that is a bullish Judas swing. We went from external liquidity all the way back to external liquidity, which means that we have invalidated this sell program right here. This latest expansion that we created in this downtrend right there, from that high to that low, we extended that out, but then we turned around and invalidated it right there. So once this after this 9:30, we went up there and we took out that buy side, we just got a bullish Judas swing and invalidated this sell program that we was in the short term right there. So now you should be looking up. You should be looking up. And since you should be looking up, how far up beyond this high can you go? There's liquidity there that we talked about was relative equal highs. There's a important fair value gap up there we talked about from our 60-minute time frame, right? And then there's that buy side liquidity up there that we was talking about inside this range right here, right? Because if we look, this short-term sale program that we're in, right? This right here is the latest expansion from this 15-minute time frame. Remember, when we looked at our hourly time frame, right? This right here was our range, right there. All of this right here was our range from the higher time frame there. Remember, because that was the high, right? That was the high from the 4-hour time frame right there, and this was the internal liquidity. So this right here was our entire range from the higher time frame, meaning that 60-minute time frame. So once we invalidated this 15-minute sale program, right, now you should have been looking up, because now the higher time frame has a reason to come up here, right? Has a reason to come up there. So that's why you should have been looking up, coupled with the fact that the algorithm is giving you clues that the probability of getting a retracement back down into this equilibrium, into these relative equal lows, are lowered. Why? Because it's giving you such a large gap up. It's used this as support, and it's left this balanced price range right there. So everything about coming back to equilibrium and back to these relative equal lows invalidates everything that has been established by this strong buy program right there. Right? So that's why you should be looking up. Now, you say, Tim, why are you looking at this as the range that you're watching? Right? Because we opened up here at 9:30, right? We rallied up into the buy side liquidity. And if you're only looking at what we've done since 9:30, right there, right? This fair value gap right there is just right there at equilibrium, right? Right there at equilibrium. And that right there is really not enough of a pullback to entice anybody to want to go short. Oh, it's about to break down, right? So what am I looking at? I'm looking at a higher time frame range, right? If I come back to the 60-minute time frame here, right? Coming from the 60-minute time frame, you can see that this is the range right there, right? Remember, we talked about our 2 time frames down, right? We talked about our 2 time frames down, right? Look at our 60-minute time frame. It makes sense why we're watching this range, because based off of our 60-minute time frame, after we made that high, this is our dealing range that we want to be working inside. Remember, your narrative time frame, your structure time frame, your entry time frame. All right. Now we come back down. I jumped all the way down to 1 minute just then on y'all. I'm sorry, but that's okay. Right. So we're looking at our range right there. This is our 9:30 open. This is our high. Right. You say, Tim, why do you have this right here marked as your first presentation? Right. Let's look at it. Okay. This, where's our 9:30 line? Right here. This is our 9:30 line right here. Okay. So looking here, right? This is our 9:30 line, right? We're not counting that 9:30 BISI right there. If we look right here, right, there's a small BISI here, right? That's a small BISI there. Okay. But that small BISI there, it's inside this range, right? What are we looking for a first presentation? We're looking for a first presentation based off of displacement that is going to support the narrative of the order flow, right? It can be an inversion, but you want it to be based off displacement, right? We have a small fair value gap right here as we're leaving this area, right? Right. Very small after we're leaving this area because we had this large retracement back down, right? So the algorithm not really showing, hey, I'm ready to go yet, right? We didn't get an immediate rebalance, but it's large pullback there. But then when we look at this fair value gap right here, pow! Got up out of there. Don't even have a bottom wick. Got up out of there. Displacement, right? So that's why I'm picking that as my first presentation, right? And then look at what happens from that right there. Used it as defending that lower half most vigorously, just like it did with that new week opening gap back there, what we talked about. Defending that lower half with everything in it, right? So then, right, once we defend that lower half and we come over here, sweep that high and start breaking back down, look at how it's defending the upper half, right? Look how it's defending the upper half. Just, everything in it went from defending the lower half to defending the upper half. That is true support turn resistance. That's what support and resistance look like. Not how many candles touched here, not how many times it came back to that area. True algorithmic support and resistance, right? And what do you notice about that right there? We came up and we paused right there for a second. So what does that make that busy as we left this area where we paused? The first imbalance after that little pause right there. So once we use it right here as support, then we come down and create an inversion fair value gap. We use it as resistance to push us back down here, right? Below that sell side, right? Below the 930 open, right? We got below the 930 open, and this right here at the 930, that right there was our lowest low. I forgot to talk about opening range. You always want to know about your opening range also, right? So this is our opening range low, sell side opening range AM, right? That's our opening range low right there from 930. Remember, time is king. When we look at our time opening range, the first 30 minutes of a thing, right? That's our opening range low right there at 930. Okay. All right, opening range low. Then we come over here. Let's find 10 o'clock. 10 o'clock is right here, right there. This is 10 o'clock there. So this, our previous day high, we're not going to mark it out for cleanliness, right? But I'll show you this candle high right here at 959. That's the highest we went, right? Let's make it green, right? That's the highest we went from 930 to 10 o'clock, right? That's our opening range, high and low. That's our opening range, dealing range from here to there, right? After 10 o'clock has hit, right? We traded above our opening range high, came back down to our first presentation, used it as support. Over here at 1034, we poked above that high right there, right? At this time, that right there is a high during a macro time, macro windows, 950 to 1010, right? So we traded above that macro high right there, right? Poking above that opening range one more time. So now price has engaged the opening range high, right? Came down after sweeping liquidity, right? Got a bearish break-in market structure during a buy program, and then used the first presentation, which it was using as support, as resistance to trade back down to the opposite end of this algorithmic dealing range.
Let him cook! I said let him cook!
Man, y'all hit a like for the algorithm, man, and subscribe to the channel if you ain't subscribed. I ain't gonna say this. I ain't gonna do it no more, man. I ain't gonna do it no more. That's all I got. That's all I got, man. Do anybody got anything for me? Do anybody got anything for me? It's just and some days it just write itself. Some days it just write itself, man. Some days it just write itself. Even when it looked like, oh man, it's chopping back and forth. Oh man, some days it just write itself. It just write itself. Hey man, if ain't nobody got nothing for me, man, we gonna call it right there. Gang. Tomorrow is Wednesday, so we got tape reading. We got tape reading. I said that I was going to start doing a public pre-market analysis with the people. Yesterday, my son, we did a college visit with my son, so I was unable to do the pre-market analysis yesterday with the gang, and then this morning I was dog tired, so I didn't wake up in time to do the public pre-market analysis today, because I had decided I was going to do it like on Tuesday with the public pre-market analysis. So tomorrow, gang, for the YouTube video, for the YouTube side, it's going to be two different streams, right? It's going to be two different streams for the YouTube side, right? I'm going to do the pre-market analysis part of it public, right? Then I'm going to end that stream, right, for the public side once we finish the pre-market analysis, and then we're going to go into our tape reading. So I'm gonna have to start a new stream on the YouTube side. So if you like to join on the YouTube side from the gang, you're gonna have to flip between two different YouTube videos tomorrow, because one is going to be public pre-market analysis stream since I didn't do it today, and then we're gonna just keep rolling right into the tape reading session. Right now, last week I know somebody volunteered to do the tape reading last week, but nobody pulled up, right? So whoever you are, and I remember a couple people's like, one person was like, I ain't gonna do it this time, I'll do it next time. And one person was like, oh yeah, I'll do it this time. It's been people volunteering out the wazoo, but ain't nobody pulling up. So whoever been doing all this volunteering, I can't remember who it was. I'm gonna start writing stuff down. That's what I'm gonna do. Where's Here to Learn and Share when you need it? She usually be coming through with hard hitting. This is what they said, but she ain't been saying nothing. I guess she don't want to be a snitch these days, right? She don't want to be no snitch. But you, she said, was it Rhonda? Rhonda, she was it you, Rhonda? Rhonda, was it you? Are you? Huh?
It was me. Yes, it was.
Come through. Come through. Tomorrow is your day. Tomorrow is your day. Come through with hard hitting analysis. Be ready to. I do the pre-market part because we're doing it public, but be ready to share your screen when we go into the tape reading and talk us through it. You ain't got to be trying to be predictive, like, oh, it should do this and do. Just read the price. Okay, I see that price has done this since it did that. This is what that usually mean it's, you know, shit, we in a sell program, we in a buy program. Oh, it inverted this. Oh, it did this. Oh, it respected that. We watching consequent encroachment. You ain't gotta say where it's gonna go and what it's gonna do. All we doing is reading the price. We studying the price, and we're looking for the signatures in real time. All right. Hey man, do me a favor. Hit a like for the algorithm. Share it with somebody who you think might get something out of it. Subscribe to the channel if you ain't subscribed. We trying to reach as many people as possible. You know what I'm saying? Trying to give them good information for less than $10,000, $5,000, $20,000. We trying to give them good information, right? That we all can afford and appreciate. Hey man, until the next time I decide to get on Algo's internet and share my thoughts on this thing that we call price action, it's your boy, Timothy Lee Rogers Sr., a.k.a. Aranya Grande. That just mean big spot if you don't hablo español. Y'all be safe. I ain't these trading streets, man. Gone.